Okay, cool, great.
Mm.
All right, so again, we are recording this seminar for people who can't participate online today. Welcome everyone. Thanks for taking time at one of the most busiest holiday shopping weekend and end of this year to look at, the very important tax planning. I have one of my great friends. She also has a business partner with us. She do all our tax returns as well as she help lots of our clients. So today we're actually going to divide into two parts. The first part we'll talk about tax saving strategies with the focus on investment property. And we will take, Stella is going to go over the important strategies we can have this year, especially during the pandemic. There's some updates with the tax incentive and benefit we can enjoy as homeowner. And she will talk about 15 minutes and then we're open for questions. I know lots of people have questions. We already received some questions from the participant as well. We'll make sure those get answered. And then we'll take about a 3 to 5 minute break. And the second section will be focused on foreign investors. What are the things you need to pay attention when if you're a foreigner investing in US, what are some of the, tax liabilities and responsibilities you need to take care of before you purchase investment properties. Now I'm giving the floor to Stella.
Thank you, Cecilia. I'm so glad that we have the opportunity to share some information that we have for the year-end tax planning for our real estate investors. Because I know this is a tough year for everyone. Everybody just trying to figure out what's going on for all those things happened in this pandemic. So first, just let me just take a few minutes, I think just a seconds, just let everyone know who we are. We are Jeff Pickering CPA office, and we are here serving the DFW area for almost 26 years. And we are not just doing the information entering, we're doing the data projection, we're doing the tax planning. That's our strong points, and we always trying to highlight this portion. We want to help our clients and our friends just trying to avoid some taxation ahead of time, not just afterwards. We always care about our real estate business and its community. So we have lots of friends in this industries, and I guess we have very good relationship with other investors. But once again, we just a CPA firm. We are not the LS, something just out of our control. We just do our job. However, we can negotiate with the IRS on behalf of our clients if we are engaged. So here, just trying to make sure everybody understand that what we said here doesn't form a relationship as the clients and the service provider. We have to make engagement letter signed. Then I think our advice or our expertise will be reflected on your tax things. So, and just let me just thank you, Cecilia, once again. Thank you, just provide that good opportunity for us, and also your assistance in other side. And today, I just trying to give you some overview of the value of tax planning and share some good news for real estate in the perspective of our taxation. And also, we're trying to give you some tax planning ideas, action plans, what you can do just for the next 10 days or maybe less than that, because the Christmas, the holiday season. So for this year, I think a lot of people may just feel this is an opportunity and also challenges. So sometimes change is good, and we can just dealing with more things in that scenario. So first of all, I have to just trying to emphasize what's the business tax planning, because for the tax planning, somebody just thought, okay, this is out of my business. This is not my business, because tax planning just for some people, not for me. However, I think tax planning is good for everyone. Every penny is worthwhile. So planning is good. When we are thinking about tax planning, we have to ask yourself some questions, like what causes your tax, and what can cause your deductions, and what can limit your ability to deduct, and also what's the impact on your choices. Sometimes the choices uh, is a kind of things that you may you may think, okay, this is my personal matters. Why it's related to the CPA burden. In our practice, most of our clients, before they make any decision or while they are doing some planning for their either personal life or their business issues, they may just contact with us ahead of time. And I think that's very good, because we are third party. We are not a realtor, we are not a broker, and also we just do not try to sell something to you. We will just keep an eye on all those things, just based on the facts. So this is the things that while we are doing tax planning, you have to think about. And then when we think about, maybe this is it is a recession, and this is the words, exactly the words that we presented to our community just in last year. And I just trying to put it here and make everybody just think about that again. I think it's in the November of 2019, we say if the recession is coming, then what you have to do? You have to check out your previous tax returns and see if there are something missing, or there anything that you can catch up with. Also, trying to keep cash in your hand. Cash is the king in the recession. And also, if you have kids, just almost at the age of go to college, then you have to think about your FAFSA, your CSS profile possibilities. Also, you have to think about the asset protection. The tax planning always just help you just take some advantages of the opportunities. Okay, now it's time that we can just hit some hot points. We are going to talk about how to do the tax planning, how to take some actions right now, and how to take some advantages of this special moments in our lifetime, I think. So for the good news, we have to mention about is the qualified improvement property. QIP can be deducted as instant expenses for this year. This is the biggest, greatest news for real estate investments. So if you ever just step into some commercial, some properties that you think you are getting involved with some improvements in this year, in the previous 2 years, then I think it's time that you can just take this opportunity to make the deduction. And this is the biggest impact on your tax return, it may be, because this is a policy that's set up back in 2017, the TCJA. The TCJA just built up this policy, but there's not any implementation. We do not get space, just trying to write it off based on that new tax rule until this year, 2020. So I guess this is an interesting point, and I want everybody just to pay attention to that. And also the net operating loss, the 5-year carryback, now is back for 2018, 2019, and 2020. So if you ever just suffer from some losses in the previous years, then it's time just to amend your tax return for your 2018 and 2019. And also, you have to pay attention to the deductible business interests, just increase to 50% of your EBITDA for these 2 years, 2019 and 2020. This is, but for real estate business, if you are in that business, this is not a big deal because it's always like that. But if you are in some other business, then you have to pay attention. This is the time that amend your tax return for the tax year 2019. And also the tax-free for the fully forgiveness on emergency loan, because this is frequently questions that we received recently. Somebody will ask us to say, okay, how about my idle? Should I just take idle money that I received for this year as my taxable income? And the answer here is no, this is tax-free. And also at the end of today, at the end of the presentation, I will just say something about your PPP loan if you get some money from the PPP loan forgiveness. Also, the 350 billion, that's news. I think most people just get it already. And then for investors, I think maybe yesterday, everybody noticed that the DFW just take the place of New York being the #1 for commercial real estate investment place. So here is some numbers maybe help for you, because for those big sharks, they have their cash ready since I think 2018. They have all those money in their pockets and they are waiting for this period of time. So I guess the real estate market will keep increasing just in these 2 years. And everybody just see how crazy it is for 2020 already. We can see how it's going on for 2021. Well, now here, just pay attention to this action list. This action list may be helpful for you, but it depends. So if you have any concerns about this actions listing, then I think the best way is make an appointment with your CPA. Then you can discuss about those possibilities. The first thing I want to mention is long-term capital gain. The long-term capital gain from the sales of assets ever held for over 1 year should be taxed at 0%, 15%, or 20%. It's depending on your taxable income. So why I want to mention about that, because this is a critical moment for most of our people just trying to make a decision whether you have to sell your stocks in your hand before December 31st or after that. This is a critical thing you have to make, because you have to just calculate some numbers, such like what's your taxable income it should be right now, and what should be your capital loss for this year, or some capital loss just on paper, whether you should just turn it into real transactions. This is the question. But just trying to remember, if you can keep your taxable income just under 80K, then you may tax at 0% for your long-term capital gain. However, it's just exceed that and the tax rate is just 15%, or if your taxable income is over 496,000, then it's 20%. Still, that's a good incentive for our people just trying to make the real estate investment. And the second point I want to emphasize is it is a good time to think about your IRA account. think about your future life. If you believe that Roth IRA is better than traditional IRA, then you can thinking about convert your traditional IRA into the Roth IRA. There are some things that you may have to consult or discuss with your financial advisors at the same time. But this is an opportunity. Sometimes we say this is a backdoor. If you are thinking this is a good time for you and will help you to save your tax, not this year, but it's just for your future investments, then you have to think about that. And then next thing we want to say is for charity. If you have some intention just to make some donations, then it is time. Just trying to do it before December 31st, 2020, because this year's special year. You can claim $300 above the line deduction for cash charitable contributions. This is on top of your standard deduction. Before or after 2017 TCJA, the tax reform, you may think, okay, things that I could not use the donations, then it doesn't matter when I can just make the cash contribution to these charities. But this year's special, you can just keep that in your mind. During the holiday season, then you can just donate $300, and it's applied. It can be applied to your tax saving strategies and help you to save some tax. And next thing, let's move on. What we have to pay attention is you can just use your credit card, just trying to make some deductible expenses before the end of the year, which means you do not have to spend any penny out of your pocket, I mean in cash, but you can make a deduction on your 2020 tax year tax returns. So this is a good thing that you may think about that. Also, maybe it's time just think about, sorry, I think this is a typo. It should be HSA contributions. HSA is a special account for your insurance, which means you can just make that contribution for this year. You can maximum contribute $7,100 for married couples. And this is money will help you save your tax. It is a direct deduction to your taxable income. And also this money can be rolled over to the next year if you cannot use it. If you would not spend it in this year, it's always with you. Then next thing you have to think about is maybe make a gift, because the gift tax exclusion, everybody should know that's about $15,000 per individual. But if you're thinking about you have some other gift tax or estate tax issues, then maybe it's a time to think about make some gift to your children, to your grandchildren, some big check, $15,000 per person. And then you can think about maybe your employer, your boss, just to talk with you, okay, because of your fabulous performance in this year, you may get a big bonus. Then it's time just to negotiate with your employer to say whether I can just defer that bonus to 2021, I mean the early of 2021, but not for 2020. Then still that's a very good tax saving strategies for everybody. And then all those above are mentioned is for the individuals. But if you have a business, then let's come to the business owners actions list. So first of all, thinking about your QBI, your qualified business income deduction, which can just help you save. And I think this is the bonus coming out from Trump administration. This is a 20% of your qualified business income. You do not have to spend a penny of that, but you can get the deduction up to 20% of your business income, qualified business income. And also you can thinking about there is a very interesting thing. Just maybe some people may just trying to make some big expenditures just at the end of the year at this time. You may shopping around for some things, but just to keep that in mind, there are two numbers. One is the expensing limit is $1 million, 40,000. This is the expensing limit. And also, if you think about some investment, the investment ceiling limit is 2,590,000. So here, the expensing generally just being defined as it's some depreciable assets, but not including the buildings, and also off-the-shelf compute software. If you have such kind of expenses, then you can just write it off instantly for this year. The next thing we have to pay attention to is the qualified improvement of property. Generally, any interior improvement to a building's interior will be defined as qualified improvement of property. And the next thing for business owners, mostly they will ask us is whether I should buy a vehicle, whether I should just trade in my old cars to some fancy big truck. I think this is a time if you are worried about your tax for the tax year of 2020, then you can thinking about the first year depreciation deduction can be reached to 100% because this is very special for this years. So this is 100% bonus possibilities for your machinery purchases. And then it's thinking about the deferring your debt cancellation event. If you just thinking about you negotiate with your banks, with the other financial institutions or the other person who lent money to you, but you cannot just pay the back in this year, then just trying to defer because the debt cancellation things will be considered as the income for this year. The next thing is maybe you can think about disposing some passive activity in 2020 because this is technically this is a thing you have to check your previous years. Whether you have suspended passive activity losses, then if you're trying to use up that losses for your tax year 2020, then it's time. But you the better just discuss that with your CPA. So all in all, whether you are doing the business as a personal or whether you are just doing the investment as in the format of business entity, you'd better just think about to talk with your CPA. So sometimes just 30 minutes consultation just worth a truck. Sometimes we can make it happen and just make our clients just get some big Christmas gift. Well, this is the most things we are going to cover for today's tax strategies for the real estate investments. I guess I prepared 37 pages, and now I think it's almost 30 minutes limitation. So I think, or I can just stop here if you have any questions. I think I'm pretty open just for any kind of questions. If I could not answer this moment, then I can just schedule time just to discuss with you.
Yeah, thank you, Stella. There's lots of information to digest. I think we have not, have the chance to focus on tax planning, especially this year with everything that's happening. Lots of us have to become a homeschool teacher and try to manage our, work and business all together. So I think this is great action list. It's a long list that we can all look at. And just for, so do you mind sharing, for if I'm a W-2, I'm a regular worker, what are the top 3 things we need to consider when we are, during the last 10 days, what can we do? And if we are a business owner, what are the, there's a great list. I think we can share with everyone if people have time to look at, but there's limited time what we can do. So what are the 3 things for business owner as well as regular employee? What are the things they can look at to save tax right now?
Wow, that's a good question. It's
I'm
very
sorry, I
interesting.
don't want to put you on the spot. But
Yeah. I like that kind of question. It's worthwhile to think about that. If we come back to your first question, if you are W-2 employees, because everything's settled, you could not just change much at this moment. But just do remember and double check whether you are worried about this year's taxation. If so, then you can just take a first look at your federal income tax withholding portion on your, anyway, you didn't receive your W-2 at this month. You're going to receive your W-2 until January or February. So the thing is, you can just check your last pay stub or the latest pay stub up to date. You can check and see whether the federal income tax withholding is good enough to pay off all those taxes, just based on your estimated income and expenses, and you may just count some numbers. If it's not good enough, not paid enough, then you can think about just trying to do some things like do the donations and trying to think about whether you can use your IRA, because this year the CARES Act just give you the opportunities. You can early withdraw your traditional IRA accounts money for your COVID-19 related expenses. So for all those expenses you spend for COVID-19, it can be just used, and also by that you can not just only get some cash out, but also you can just trying to pay enough income tax by withdraw your money from your retirement account. This is the second thing you can do. And the third thing you can do, I think, is trying to think about, are there anything that's regarding your rental properties? For your rental properties, if you think, okay, I'm going to just do some like fancy repairs or some remodel things, then you can negotiate with your contractors right now, and you can pay them in advance, let them to receive your payments, and then also that would be a kind of expenses on your rental properties. I guess this is a good, and just if this is still depends, because for most of our investors, your rental profits is maybe it's not a good one, but if it's a good one, then you can think about that. Just trying to keep that principle in your mind. If you're worried about your tax, just trying to defer your income, but accelerate your expenses.
So the expenses, property improvement in the interior needs to be invoiced.
That's right.
By the end of this year, in order to do the depreciation.
Maybe not just the invoice. You can just prepay that.
Okay.
Right. Just to put some down payment, or you can just spread it. If you're thinking about 2020 is a good year, however, 2021 may be another good year, then you can just split into two, not just trying to spend that in 1 year. Then you may take more taxes for this year. So sometimes just a spread out is a good strategy for some scenarios, but it still depends.
Right. So for small business owners that, there's all the incentive that they receive this year, do we need to do anything towards the end of the year in order to maximize the tax benefit?
Yes, for the business owners, just like what we mentioned is the first gifts you have to try to get fully received is the qualified business income deduction. Just trying to see, because qualified business income deduction is easy to say because it's 20% of your qualified business income. However, it's still some criteria and some conditions. So you have to comply to the tax rules. The best way just to compare what's your wage and what's your business income. And if necessary, we can adjust your business salary, I mean, from your own business side, and just trying to reach the target. We're trying to fully use that 20% of QBI. That's the first thing. So you can adjust that by your W-2 wages, which is distributed by yourself, which is cut by yourself. So that is good. And also for that wage planning, I think we can do that until January the 15th from our CPA firm timeline, because as you may realize, this is the end of the year, and if you're trying to adjust your salary expenses, then January 15th still good. Just trying to prepare a paycheck for yourself or for your just direct family members, and just trying to get some deduction for that portion. And the second thing you can just thinking about, of course, is just trying to do some investments. Some investments on yourself, like if you're thinking about to get an MBA things, you can, or you want to
So do you need
register for
pay your tuition for your education by the end of the year to qualify as well?
That's right. You can use your credit card to pay off the tuition right now. Maybe it's not good for colleges, but it's good for some other programs. So you can just shopping around and see. So invest in yourself or invest in your family, invest in your business. All those things that's just regarding how to just get more.
So you can upgrade your office equipment as well, right? New computers and new machines and things you need, right?
That's right. So trying to use your credit card, not to use your cash. So,
great. Great. Yeah. So we will take a quick break. I'm sure that lots of people have questions. You can ask Stella directly. I'm just going to stop the recording for a little bit so we can start the next section with the focus of foreign investors on real estate properties.
Okay, thank you.